Let me quickly talk to you about how to file taxes for the very first time this year. And in today's conversation, I'll be spilling the beans, okay, all the beans, and I'll be giving you 5 simple steps if you are a taxpayer newbie. So don't you go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie KIWI Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. In today's conversation, I want to give you baby steps in helping you file taxes for the very first time. I'll be giving you specifically 5 steps. Step number 1, you need to determine if you need to file at all. So first things first, let's figure out if you even need to file, because this will depend on your income, age, and filing status. For instance, if you're not married, younger than 65, and your gross income was less than $12,400, you don't need to file this year. On the other hand, if that income was from self-employment, this will be considered a quote-unquote special situation, and you will be required to file your tax return. Okay, and if you are required to file, the most important document is Form 1040. And also Form 1040-ES. So you got to use Form 1040-ES to figure and pay your estimated taxes for this year. And estimated tax is the method used to pay tax on income that is not subject to withholding. For example, this could be earnings from self-employment, interest, dividends, rents, alimony, and what have you. So don't forget also about your gig economy income. So millions of young people participate in the gig economy as ride-share drivers, making package or food deliveries, freelancing full or part-time, or working as a project-based consultant. So if you have earned income from freelancing, do not forget to report your gig work income on your tax return. So depending on how much you earn, you may receive a 1099 miss for miscellaneous for your work. But even if you don't, you still need to report the income to the IRS. So you will report your gig work income on a Schedule C, which is attached to your Form 1040. And usually you can deduct any expenses related to your gig work, such as miles driven, supplies, and advertising costs on a Schedule C as well. And if you're not sure if you need to file at all, the cool thing is the IRS has a convenient tool to help you determine that. So just go on the website on the screen below, just answer a few simple questions, and you are good to go. You also need to determine if your parents can claim you as a dependent. Okay, many young adults get financial assistance from their parents even after they start earning their own money. So you might still live with your parents, get money from them to help with living expenses, or they may be paying for your education, right? If so, your parents might still claim you as a dependent on their tax return. So basically, there are 2 ways your parents might claim you as a dependent. Option number 1, as a qualifying child. Option number 2, as a qualifying relative. Let's start with qualifying child. So if you are under the age of 19 or under 24 and full-time student, and your parents provide more than half of your financial support, your parents can likely claim you as a qualifying child. That's option number 1. Option number 2, qualifying relative. So if you are not a qualifying child, your parents might still be able to claim you as a qualifying relative if you earn less than $4,400 this year. You lived with your parents all year, and your parents paid more than half of your total support for the year, of course. So if your parents claim you as a dependent, they might be able to get certain tax benefits, such as education tax credits and the credit for other dependent. The thing is, you still need to file a tax return if you had enough income. But when you prepare your income, when you prepare your tax return, right, you will need to indicate on the form that you can be claimed as a dependent on someone else's return. So the IRS can actually cross-check your social on your tax form with your social on your parents' tax return. Okay, so before you file, you want to talk to your parents to find out whether or not they intend to claim you as a dependent. So because the thing is, you want everyone to be on the same page, and it's important because you don't want little one. The last thing you want is to have the IRS audit your parents' return and your own return as well if you made enough money. So make sure that everybody talks, that you are on the same page. So it's important. So when we talk about determine if you need to file, you need to determine about your own situation, if you meet the income or I would say age requirements, or you need to also decide if your parents can claim you as a dependent. Step number 2, you need to gather all of your documents. This is very important. Okay, if you are expecting a refund, you might be eager to file your tax return as soon as you can. So throughout January, February, and even March, you can still receive important tax documents in your mailbox, email, or online. So you want to collect all of the tax documents needed for your taxes before you begin. I'm speaking about your W-2s, your 1099s, your tax forms that report other types of income. I'm speaking about interest, income, dividends, and whatnot. You have your tax deductions and receipts. If you file without one of those forms, you might need to amend your tax return later, which is not a big thing, but you really don't want to do it. I mean, why go for the extra complicated step if you can do things easily? So take a minute and think about anything you did in the past year that might impact your taxes, such as changing jobs, opening a new savings account, selling stocks or mutual funds, paying college tuition or student loan interest. This is not an exhaustive list, but this gives you an idea of the things you need to think about. If you need to file, you are going to need to gather your tax forms. Okay, so this may include income tax forms. I just said that. You have W-2s, 1099s, and other forms, okay? And you also have to think about deductions. So these are the things that can lower your tax bills and add to your refund. For example, if you are a student, you may be eligible for deductions because your school will notify you of qualifying costs by sending you a Form 1099-T. You can also deduct interest you paid on your student loan, or if you are a freelancer and working from a home office, you might get the home office deduction. Now the IRS has specific rules for home office deductions, so if you have a question about that, we'll be very happy to answer you. We don't have time today to actually cover that, but yes, there are rules, okay? However, one thing I want to say here is that it might make more sense for you to go for a standard deduction, because a standard deduction is a flat amount the IRS allows you to subtract from your income instead of adding up all of your deductible expenses. So the amount typically changes every year to account for inflation. So for example, this year, if you are single or filing separately, you can deduct $12,400, okay, in terms of a standard deduction. So this is totally worth it, because most young people, when they start filing their taxes, they don't have expenses that they can itemize to the standard deduction amount. In other words, you certainly right now don't have expenses that can go all the way to $12,000. I mean, $12,000 or $13,000 in terms of itemized deduction. So it's just a lot better to go for the standard deduction. Step number 3, you need to consider relevant tax deductions and credits. So this is really important, right? Tax deductions and credits, as you know, can lower your overall tax bill and even increase your refund. So you want to make sure you take advantage of everything you are entitled to claim. This is what I was just telling you earlier about making sure that you keep records. Record keeping is very important because this is potentially money right there, because you are paying less taxes, or in even some cases you can get a refund from the IRS. Okay, and so some common tax deductions and credits for first-time filers include education credits like the American Opportunity Credits and the Lifetime Credits, the Lifetime Learning Credits. You also have the student loan interest deductions. You have the standard deduction or itemized deduction. As I just said earlier, it's just a lot better for you in your situation right now to go for the standard deduction. This is like $12,400. It's really worth it. You have the earned income tax credit, and you have the home office deduction if you are self-employed. So this is important. And I was just talking to you earlier about the home office deduction. I'm going to quickly talk about that. Now, the IRS wants you to segregate your personal affairs from your business's affairs, okay? And this is a lengthy topic, but I'm going to quickly talk about it. If you have questions, please email us, or you can put it in the comment section below. So when we talk about home office deduction, you have to prorate the part that you use for the business. For example, if your office occupies 1/10 of your home, in terms of square footage, you want to actually allocate only 10% of the expenses, such as utility bills, mortgage interest, or if you're paying rent, so you want to allocate that to the business. The IRS checks this very, very, very thoroughly, so make sure you are clear about that. The same thing applies to your phone. So if you have your cars, for example, if you have a car and you are driving around and you have a personal car that you use for personal and business purposes, then you have to be really clear about the logs that you lodge for businesses, for the business part of things, and the logs that you lodge for the personal part of things. At the end of the day, it's all about record keeping. It's all about being truthful also, because you don't really want to start messing up with the IRS and start telling lies. This is definitely not good. You need to decide how you file your taxes. So this is step number 4, and this is really, really easy. So now you know that doing your taxes boils down to adding up your income and deductions and hoping the latter will overweight the former so that the government pays you and not the other way around, right? So it's time to file. So this year you will have until April 15, April 16, and so this is really good. But what exactly is the process of filing your taxes? So there are a few options, and you have options. Again, it's really important to understand what your options are so you can make the right decision. The option number 1, you can file online. So one of the most popular ways to do your taxes is to file online. So you have services like Tax Act, TurboTax, H&R Block, you have Credit Karma. So those services you can file for free if your tax situation is simple, or you pay for one of the premium packages to get access to extra features and help from tax specialists. And the good thing is you can even check free e-file options from the IRS. And one thing I want to say here is that we have reviewed all the tax tools on this show, and using these tools is comparatively easy, very easy, because those software providers, they actually make sure that their products are very, very user friendly, because during tax season, the last thing you want is to think about how to learn a specific software tool. So one of the most popular ways one thing we have seen is that one of the most popular ways to do your taxes is to choose one product, choose one tool, and just stick to it throughout the years. So using these tools is comparatively easy. So, the thing is that they always have an FAQ style. So they ask you questions, and based on your answers, they will actually fill the next form, the next question. They will inform the next questions, and over and over. And so you have popular tax software tools include TurboTax. You have Tax Slayer. You have Tax Act, and you have H&R Block. Obviously, there are more of them here. We have actually reviewed them on other shows. If you have questions about this topic, please email. You can just drop the questions below, because we can just send you the link, and you can go back and watch that show. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sorty KIWI show. We are still having a conversation about how to file taxes for the very first time. So I was on number 4, deciding how you want to file your taxes. And the first option is filing online. The second section is, let's just talk more about online filing, because it's important. Now, nowadays, you can do most everything, from paying your bills to ordering lunch online, and filing your taxes is no exception. So using a good software tool makes the tax filing process simple, because it walks you through a series of questions, fills out the right forms, and helps ensure that you claim all the right credits and deductions. So if you choose to e-file your return, Instead of print and mail it to the IRS, you don't have to think about the correct postage or standing in line at the post office. So the IRS estimates that taxpayers who e-file their returns often have their refunds issued in as little as 3 weeks. And you often receive your refund even faster if you choose to have your tax refund directly deposited into your checking or savings account, which we recommend anyway. So first option, you want to file online. Second option, you want to file with a tax pro. So the thing is, if you have complicated taxes and you are just not really sure about how to start things, it's just a lot better to contact a tax pro. You might be thinking, well, this will cost me $100, but you know what? It's really worth it, especially if you don't want to get audited. And if this is your first time, some people are good at math, people are good at accounting, some people are good at taxation. If you're not one of those folks, that's fine. That's totally fine. So you want to outsource the whole thing to a third party, to someone. And when we talk about tax pro, you want to look for someone who is an accountant, who's a tax practitioner, who is a CPA, a certified public accountant, an EA, an enrolled agent, or a tax attorney. So somebody who has just experience with the whole thing will kind of help you. And the third option is you can file your taxes manually. So if you never met anyone who's still doing their taxes manually, especially when it's their first time, hey, listen, this still exists. People are still doing it. You will have to fill out Form 1040 or Form 1040 SR by hand and use a calculator to add up all your income and deductions. Then you'd have to mail the form and wait for 6 to 8 weeks for the IRS to process the return. Okay, so this is really what it is, and some people are using it, and it's totally fine. We would not advise you to actually use it because we think the e-filing is very straightforward and a lot more beneficial for you. But if you want to do things manually, please go ahead and do it. So now you have to decide how to pay your taxes, if you owe, of course. So this is step number 5, okay? I mean, this is not the fun part, but you have to do it, okay? Now, often you can expect a tax refund, meaning you overpaid taxes in the year prior, and the IRS will return the money it owes you. But sometimes that's not the case. It's actually the reverse. So if you are responsible to pay your share of the taxes. So here are a few things you can do. You can pay with your bank account. So basically, this is your best option because this way you will avoid any fees. Plus, the IRS will have your account information on file for refunds and awesome things like stimulus checks if they ever happen again. So people who pay directly from their bank account can count on the quickest process and the fastest refund if you are owed one. So this is kind of important. So you can also pay with a card. So you can also pay taxes with a debit or credit card, but keep in mind that you will have some fees involved. They usually are like 2.9% to 3% of the amount charged. So if this is a more convenient option for you, you want to consider that, okay? I mean, it's costly, but yeah. You can also apply for a payment plan. So what if your tax burden is too big for you to pay? Well, this too happens, okay? So all you have to do, just talk to the IRS. The IRS offers various payment plan options, okay? And like with any kind of debts, there's interest to pay on top of penalties. So in a pinch, a payment plan can be very helpful. Plus, it will help you if you are owed a refund in the future, since it will go towards your tax debt. Okay, so this is really what it is. And the IRS offers solutions for other situations too. For example, when you don't have a bank account, or if your financial situation is really dire. So the bottom line is there are options. Never actually, this is what we always say on this show, you definitely want to file. You always want to file. Okay, because if you don't file, there's nothing, you don't kick anything off in the system. But when you file, the IRS, for example, will understand why you are having, you're having a hard time paying them, and they can approve you really fast when it comes to a payment plan. And that's what you want to do. You want to keep the communication doors open so that everybody's on the same page. Okay. Thank you so much for your attention. In today's conversation, I was explaining to you how to file taxes for the very first time, and I give you 5 very easy rules. So determine if you need to file, gather all your documents, your tax documents, consider relevant tax deductions and credits, decide how to file your taxes, and decide you want to pay your taxes if you owe some money. Okay. Thank you. God bless you. I'll see you next time. But until then, remember, stay marvelous.